Pretty steady session on the Mauritius market, and it's been pretty steady, though slightly declining since May the 16th, and that was when that market went to an all-time high, the Cim Stockbrokers reaching 2,105 points. Really been drifting since then, though.
Hi, good morning, everyone. Yes, we've seen the market after reaching an all-time high of 2,113 on the 16th of May being on a decline. That was mainly because after the release of good quarterly results, now the market is in a certain way on a correction phase, mainly driven by profit-taking on some across the board mainly, but more specifically we've seen the hotel stocks falling out mostly on the back of pressures rising due to their high debt-to-equity ratio, and with interest rates going up, they might tend to lead to an increasing in their finance expenses in the short to medium term.
Well, let's chat about those interest rates in a little while, but staying with the Semdex, because some of the drivers that got the market to that all-time high, and I think the previous high was back in February 2008 when we had the Semdex trading at 2,101. But it's really the strength of corporates in Mauritius and some of the good company results that we've seen coming out of that country that drove that market higher. What are you looking at to take it back up again, or do you think we are going to see more consolidation and further pullback?
Yes, to come back, we've seen actually since the start of the year the market rallying quite a bit. That's on the back of good fundamentals coming mainly across the sectors, and also specifically for the banking sector, where the two players, MCB and State Bank, are posting very good results. MCB is actually expected to post a record profit this year, profits which also beefed up by exceptional items. But all in all, MCB, which is the largest bank in Mauritius, should post earnings growth of 30% with exceptionals, and excluding that should be around 18% for their June 2011 year end. State Bank also is doing quite well, and also we are seeing the hotel sector which is doing better operationally with increases in arrivals, and also occupancies have gone up quite a bit.
Well, you mentioned the interest rates, and of course we know the next MPC is coming on June the 13th, where they're going to decide on interest rates. What's the feeling in the markets? Are you going to see steady as she goes, or could we see an increase in interest rates with rising inflation?
Well, actually there's a dilemma between that's everywhere else, where there is the inflation going up, and on the other side we've also got to look at economic growth. Here we've seen an increase in interest rate earlier in March, with the repo rate increase from 4.75 to 5.25%. Now we would tend to believe that given that the rupee has appreciated quite a bit since the start of the year, particularly against the export currencies, we would tend to believe that the central bank might leave the interest rate unchanged, at least for the next meeting in June, just to not to put more pressure on export sectors that are actually facing tough times because of the appreciating rupee.
Of course, inflation sitting about 4.4% for the month of April. Have you seen it? Are you seeing it trending higher at this stage? Is there a threat that we could see it moving potentially much higher as well?
Yes, definitely. Just to compare, last year at the same time, the inflation rate was at 1.8%. Now it's at 4.4%. And the expectation that by the end of this year it could cross the 6%. That's mainly on the back of commodities, oil prices that are going up, and given that Mauritius imports mainly most of its basic commodities, we've got to face inflation, and that is on an upward trend.
Well, you mentioned the strength of the rupee. Is there also a feeling perhaps if we do see interest rates going up again in Mauritius, that this could lead to further strength in the currency?
Yes, definitely. That's why we would tend to believe that at the next MPC they would leave the interest rate at its current position, but they might eventually, by the third quarter of the year, have to increase interest rate because inflation is coming up fast.